present and talk about the businesses and how they got to where they are today. I'm not going to talk so much so we can dive right into it and you guys can ask all the questions you want. Initially, we're going to have them introduce themselves and then talk about the background and their stories. And then we'll open it up to you guys for questions. Feel free to ask whatever questions you have in your mind. I'm sure you guys have a lot of questions. And with that, I'll hand it over to the moderator to introduce herself and the panelists will go after that.
Great, thank you. Good morning, everyone.
Good morning.
Can you hear me?
Yes.
Okay, wonderful. Wow, if all of you, let's say even 10% of you start your businesses after this session, we'll be in good shape. So I'm putting the pressure on these gentlemen here to get us all excited about starting our own businesses. Also wanted just to say hello. This session is being broadcast, so other people are following here with us. I'm Maji Sok. I'm the Regional Director for Africa for Dalberg Global Development Advisors, based in Dakar, Senegal, and saying hi to a few of my Senegalese compatriots here. I left the U.S. 7 years ago and decided to move back to Senegal after 14 years around this country. And each time I come back, I remember how much I love America. And I'm always amazed at the entrepreneurial spirit that sits in the U.S. But I must say, at this time, I'm also super excited about going back when I come to the U.S. Because I find, and this is speaking from true experience, that Africa is now the land of opportunity. And I'm not saying this in a cliche way, but just to say the excitement we see here, the opportunities we see here, are truly now happening on the continent. So I hope you'll all get excited and learn some tools and some approaches to getting your ideas started. We'll try and we don't have much time. I'm sure you have a lot of questions. We'll try and take 30 minutes just to hear from our distinguished panelists, and then we'll try and leave as much time as possible for questions. You've all read the profiles of the panelists, so we'll try and ask them not to speak too much about what they do. We really want to hear about how they did it, and we want them to be very concrete as to what worked, what didn't, what they learned, etc., to get to where they are today. So I'm going to start with a question for each of them, if you don't mind, gentlemen. Yes, and we need more ladies next time. I'll ask you all the same question. Tell us a little bit about yourselves, but also if you can tell us what was the trigger that got you to go ahead and start your business. What was that trigger? And also if you can tell us just the first step you took. What was that first very concrete action that got you started? I think that's where a lot of us hold back or pause. So we want to hear what that is that got you started. Tunde, shall we start with you?
Sure. Good morning, everyone. Good morning. I'm Tunde Kende. I'm the co-CEO of Africa Courier Express. We're a delivery company in Nigeria looking to expand across Africa. So I guess the first question is, what got me started? What was the trigger? So I used to run a very large e-commerce business, Jumia Nigeria, which is basically the largest e-commerce business in West Africa. And the biggest pain point we had was the logistics, right? There's a big demand to shop in my country because access to goods is very tough. Also, where can you find a wide array of assortment, fantastic prices, great customer experience? So people want to buy. And you can more or less find the stock in the country. But the tricky part is, how do you get a fridge from Lagos to Abuja, or a lipstick from Port Harcourt to Warri? It's very complicated. And how do you also collect a payment at the point of delivery? Because in my market, we're not yet ready to prepay online. And that got myself and my business partner thinking, if we at Jumia had to build an in-house logistics fleet, what are the everyday SMEs, the everyday individuals doing to get their goods to their customers? And that's how the idea for Africa Courier Express came. In terms of what we did concretely to launch, we just started, to be honest. There was no, my investors always joke, there was no fancy 20-page business plan. We had a 5-page PowerPoint. We explained what we wanted to do. And we put our own money into the business and we launched. We had a tiny office that wasn't bigger than, maybe 10% of this room. And it was myself and my partner with 3 drivers. And we started on day 1. And I think what that showed to folks was, look, we're willing to put our money where our mouth is. We've hired a team. We're making a little bit of money. And so this is a team that's ready to go. And that was where everything started.
Great. Thank you, Tunde. Elo?
Sure. Good morning. My name is Elo Ume from Lagos, Nigeria. I'm CEO and founder of a business called Terragon Group. We're into digital media services. And the business is 5 years old. And we started in 2009. And we have 3 different businesses in the group. One is into mobile advertising, one is a digital media services business, and one is into access and aggregation. We have 5 offices across Africa: Nairobi, Accra, Johannesburg, Lagos, Mauritius for finance reasons, and yeah, that's about it. So what was the play? We started in 2009, and we got started because the idea came up when I was part of the founding team at MTech. The iPhone got launched, and we saw that the mobile phone was going to become something different. It was the cool phone was no longer the Ericsson R380. It became the iPhone. It became a smart device, and that was the trigger for me. I started to think about it. I had no money. I was pretty young at the time. That led me to start consciously looking for ways of funding a startup in Africa. At the time, I had lived in Ghana, I had lived in Kenya, I had started a business in Ivory Coast, all MTech businesses. So I had quite a bit of grounding, so I had some education as well. That is education on the ground with running businesses across the continent. I went on to join the IFC as a consultant on mobile payments, helping them with scaling up their rural women infrastructure which they had built across Nigeria and several parts of West Africa. And essentially what we're trying to do is figure out what the regular women who had umbrellas and mobile phones given to them by the IFC, what services could ride on top of those devices. I did that study for about a year. Essentially, the goal was, of course, to add value to the primary responsibility, which was get the best services to the women to scale up their regular phone delivery. But beyond that, it was to raise some capital to get started. And from there, I got some money, and I went off to start Terragon. But the objective at the time was what opportunity. Our goal was to build a mobile marketing business, build a business that is focused on advertising, and it was to build Twin Pine. That's what the business is called today. But we didn't start off on that note. We started off with a different business, a business that could capture cash flow to secure our future, a business that could. What was the low-lying fruit? The low-lying fruit was to go into the content play to provide access to people who wanted to monetize. So went into the mobile payments play with the objective of evolving that business into mobile advertising. 5 years down the line, the business has moved from pure content. So our revenues has moved from significantly content-driven to more mobile advertising and marketing, which was our destination. And how do we achieve that? We achieve that by protecting our downside risk by guaranteeing our cash flows. And that cash flow guarantee came from the content business. So I think it's absolutely important to think about. And what has that helped us achieve? Till today, we haven't raised any money, and we're cash flow positive, profitable, and several people are knocking on our door. So we hold the cards, and we are selecting our partners very carefully.
Thank you very much, Elo.
I'm Brooks. I run a company called Roja Ventures and another company called Juniper Glass. I guess the trigger for me to leave or to start this was I was working at McKinsey in Lagos, and I worked at McKinsey across Africa for 6 years, so for a long time. And I kept seeing all of these. I kept seeing all of these interesting businesses, and I kept having all these ideas. And then I did a lot of private equity work at McKinsey. And so my last project at McKinsey, literally, was I was working on a private equity project where there was a packaging company in West Africa that was about to be acquired. And so this packaging company was 2.5 years old, and they were about to be acquired for like really an outrageous sum of money. And I asked the founder of the packaging company one day when we were doing the due diligence, what did you do? He said, look, I looked around and I said that there was none of this type of packaging in West Africa. And so then I went to Brazil. I found a great factory that does that, and I copied it, centimeter for centimeter, and brought it here. Like even our break room is structured the same way. And this kind of triggered something in my mind, which is that, across the continent, there is just so much need for new companies. There's so much need for new products, for new everything. And a lot of it doesn't require reinvention. A lot of it just requires good execution and a good idea. And so that's a combination of kind of having that and seeing how much money these guys made was why I decided to make the jump. And on the second question of what the first step was, to be honest, the first step is quitting. And quitting McKinsey is not an easy thing to do. It's definitely not always the right thing to do. But I think that once I had made that decision and resigned, I really kind of had the impetus and the motivation to get things done. Beyond that, I really echo what Tunde said, just getting started. I think that for me especially, kind of having spent, a huge part of my life at my adult life at McKinsey, I was all about PowerPoint decks and analysis and things like that. And I wasted a lot of time doing that. And what I should have done and what I ultimately did do was just jump right in to starting this glass company, Juniper Glass. And it's been ups and downs, and I screwed up a lot of things, but I'm glad that we just jumped in and got started. And because now I think we're in much better shape.
Great, thank you, Brooks. Jason?
Hi, my name is Jason Njoku. I run Iroko TV, which is a Nigeria-based streaming and distribution company. So, unlike a lot of these guys, I've never actually had a full-time, formal job before. Since 2005, when I graduated from chemistry from the University of Manchester, I've basically been kind of creating businesses like over and over. So, in 2009, I had the idea of creating something in the Nigerian entertainment space. I'm not sort of like a strategic, deep, kind of analytical thinker, so I just jump into things and just figure them out as I go along. There was no business plan. There was no sort of like grand vision. It was just there was something interesting I was doing. Let me just figure it out as I go along. So as I've sort of eased my way into that, I kind of figured out there obviously was a massive amount of dysfunction in Nigeria. There's a lot of value to be captured by sort of slightly improving that dysfunction. Typically, if you're going to realign an industry, you can extract huge amounts of value. So for me, it wasn't really even a passion move because I don't really watch Nollywood movies. I can't remember the last time I actually watched one. It wasn't really like an understanding thing because, the first time I went to Lagos, Nigeria, was 2010 when I went to go and figure out what this whole Nollywood thing is about. It's not obviously some greater goal for passion for Nigeria because I think the country is just a crazy place to be. I genuinely struggle to be there. But I think, at least from my perspective, it's I've always been like a small business operator, and nothing has really sort of changed about that. So for me, it's very much matter of fact. It's not about spreadsheets and like MBAs. It's basically focusing on like the fundamentals and just having a lot of courage to go out there and do things. So for me, like I've never had a lack of courage. I've always had a lack of capital or something else that I felt
Great. So forget about PowerPoint, forget about analytical skills, forget about...
Yeah, definitely not.
A lot of courage and just jumping in. Let me ask another question. This goes to Tunde and Brooks. In terms of two different models you use, often I hear, let's not reinvent the wheel in Africa, which seems to be your experience. And sometimes as you get started, you realize the wheel is actually squared. So how do I manage this? So I wanted to hear a little bit more about how you modified or established your business model as you got started.
So Brooks's point is a very fantastic point. I think a number of times we're looking to create this, really innovative, fantastic model and bring it to the continent. But I would strongly suggest, in general, a lot of things that work in different parts of the world can work in Africa. But what's very, very important is to localize it. And I'll give you two examples. So in my prior business running Jumia, we're bringing basically an Amazon type model to the continent where you can buy your clothes, your phones, your books online and have it delivered. But what we found is that the trust in the market is not yet there in terms of people being comfortable prepaying for goods, right? So putting your credit card or in most cases your debit card online and trusting that these new guys will deliver my item and if something goes wrong, they'll return my money, right? That trust wasn't there yet. And so what we introduced was pay on delivery, which is literally you can browse a wide catalog, you can order your goods, and when it reaches you in your home or your office, you can touch it, you can feel it, and then you can pay for it. And while it can be quite risky, and I think it's important that you note that what all the guys are saying about jumping in is very important, but what the bigger point is not to ignore your analytics, but not to have analysis paralysis. In some cases, you have to jump and then use real data to inform your decision making. And so we did pay on delivery. In the beginning, it was very, very difficult. We were having rejection rates, in some cases, up to 50%. So you can imagine shipping out a fridge or a phone. Someone opens the box, says, "You know what? I'm glad it came. Thank you. Send it back." But what it did was it really opened the market, and we grew from 5 orders a day to shipping close to 3,000 items every single day by the time I left Jumia. So it grew a lot. Now, in my current business, we focus on enabling commerce through logistics. So I work with all the major e-commerce companies, fast food companies, retailers, helping them get a good from point A to point B, collect a payment, and get it back. But what we've done in this market is in this model is try to be as asset light as possible, right? Because I'm a startup, I cannot afford what DHL or UPS does, where I can buy tons of trucks and cars and bikes. And if my volume dips or something goes wrong, because we are in an emerging market, things change very, very quickly. If for whatever reason the economy should slow, or as we're seeing in Nigeria, the FX should change overnight and people are not shipping as much, if you're stuck with a bunch of assets, it can really damage your business. And so what we've done is two things. One is to really work with a number of smaller third-party providers who we pay on a as you deliver basis. So that asset is not on my balance sheet. If I have volume, I bring them in. If I don't need to contract them. So it's kind of taking a play on what Uber does in the market. And so what I would say is good businesses are built on very, very deep insight. Before you launch your business, it's important to come to the market, understand what's going on in the country, do some numbers, don't do no numbers, do some numbers, launch and try and iterate and localize as much as possible. And if you do that, you have a good chance.
Great, thank you.
Yeah, so I completely agree with what Tunde was saying. I think the key to this is to identify to first identify a gap. I would say there's kind of 3 steps. You identify a gap, and there are any number of gaps. I'm sure everybody in here can identify some gap that they've seen across the continent. The second thing for me is to go and to come up with a hypothesis. And for me, that hypothesis is often based on something you see somewhere else in the world. And from there, you can say, okay, well, how can I try to fit this hypothesis into this local market, like what Tunde is saying? And so for us, we are building a glass factory that manufactures glass bottles, just for beer and soda and all sorts of things like that, in Ethiopia. Glass is a technology that was literally mastered 500 years ago. There's no innovation there at all. But trying to put up, a $50 million 8-hectare factory in Ethiopia is not exactly the same as trying to do it, in New Jersey. And so I think that for us, that's where we have really had to spend a lot of time tailoring things, both to the local conditions, from regulatory, there's no land ownership in Ethiopia, right? So trying to figure out how to do that. But then also just to the local kind of market and how things work. In Ethiopia, unlike in a lot of other parts of the continent, there's no fuel. There is zero local fuel source. And so we had to spend a lot of time going and figuring out, okay, is this possible to do without fuel? Because around the world, 98% of glass plants are either fired through heavy fuel oil or natural gas. So is this even possible? And then finding the right technology to do that. And ultimately, working with a team of great engineers, and we've realized that we can do it through electricity. But that is kind of somewhat innovative, and it is a local solution, even though it is a global technology. And I think that, like Tunde was saying, I think that really is the key. Is that a lot of times, the backbone of what you're trying to do can come from somewhere else. Most of these things have been solved. There are courier services elsewhere. There are content providers elsewhere. But being able to provide a local service that is actually valuable and that actually works in the local context, that's what really takes a lot of effort. And that's what also is the competitive advantage that people have from being on the ground, and that what ultimately makes things worth acquiring in the future.
Great, thank you, thank you. And my third question goes to Elo. We taught very much when we're starting a business to do a lot of market analysis, understand your customer, understand the consumer. And a couple of you have mentioned that lack of data that we face very much in Africa. Can you give us examples of how you went about this? How did you, innovative ways, I'm sure, how did you go about understanding your customer and client and adapting your business to that market?
All right. Well, I think everything starts with the individual. So to build an organization, it starts with one person, and that's the entrepreneur. I think that from my experience, it was more from a standpoint, I looked at it from a standpoint of where are the opportunities. Many people were surfing the internet from mobile devices, but all of the leading publishers did not know that fact. So they took it for granted. So we had some data. We had the data, we put it together in presentations, and we went to the likes of Guardian, we went to the likes of Punch, all the leading publishers, Linda, AKG, and co. And we told them, hey, people are surfing your stuff from mobile devices. They're not coming from desktops because everybody had websites rather than mobile sites. And we said to them, we can aggregate this stuff for you on the platform, and we'll put it together for you on the platform. So there was some data. But beyond that, I wasn't going to put together a whole bunch of PowerPoint presentations, cash flows, projecting 3 years, and started sharing it with my partners, with guys who I'm trying to hire. And what was important was, this is the opportunity, keeping it simple at the beginning. So we took that to the publishers, and we told the publishers, you don't even need to pay us any money, because if we pitch it to them, pay us and we build a mobile site for you, it will take us forever. And we'll start paying salaries for 12 months. So for us, we said, hey, these 3 technology guys out of Ife, very, very low salaries, got a very good friend of mine who I was working with before in India, who built a strong backbone, and we were able to replicate mobile sites at scale. And we built it for all the leading publishers. And we went to agencies and told agencies, come and advertise on these platforms because the user experience is much better. So in summary, there was data backing it, but it didn't, like Tunde said, it didn't need to be analysis that will lead to paralysis. It needed to be very, very simple at the beginning. When it's simple, you can sell it. When it's simple, you can get investors in, if the opportunity needs that kind of scale. I think that moving from 0 to 1 requires not so much data. Moving from 1 to 10, validating the business model, requires a mix of both. Moving from 10 to 100 requires a whole bunch of data. That's where the MBA is coming. So and that is the reality. If starting, it's not so much. It's important. You need to have enough to have the conviction to beat your chest to tell. If I'm trying to hire an MBA, hey, come and help me do this stuff. I'm trying to hire a technology guy. Hey, you need to have that conviction. And it's data that's going to fuel that conviction. But if you don't have enough data, you don't need to have so much data where you're telling them stuff and you're confusing them. Nobody's going to come with you. So that is essentially finding that delicate balance is the key.
Great, thank you. We do a lot of work across the continent. Sometimes it's multi-country strategies, whether it's government, private sector, or other clients. And each time we bring Nigeria in the mix, people say, Maji, I don't want that example because they have money. So don't tell me to go and look at what's happening in Nigeria. So Jason, I would love to hear from you on the fundraising side of things, the money side. How do you go about it in Nigeria? And to hear from others also, when you went to other countries across the continent, were there any differences? What were the challenges there?
So Iwoko's fundraising story is incredibly peculiar in a sense where we never actually went out to fundraise. We had this really simple perspective that, you know what, there are a huge amount of people in the UK where I was at the time who were listening to like Nigerian music and watching Nigerian movies. How many? I had no idea. What I did kind of believe that if I could get the right costs in terms of licensing, there might be an opportunity to kind of, I would say, connect the people who love the content with the content themselves, and there should be some value kind of in there. So our perspective was like, let's do that, and we'll figure the rest out. I had no money. I had an angel investor in my best friend. He basically gave me a bunch of money. I jumped on planes, did a whole bunch of deals with some strange characters, and we put the content on YouTube and just saw what happened. And essentially, we were acquiring a license for like $100 for like a year. We'd essentially make the money back in 1 week, and we'd have like 51 weeks worth of, I guess, ROI positive stuff. We went from like 0 to 1,000 movie licenses within 6 months. by the time the investors came to kick the tire, we were generating like $50,000-$60,000 a month. $20,000-$30,000 of that was just like pure profit. It was like me and a couple of guys in like my apartment. So like we had the numbers. It was like, look at what we have. So they were like, hey, if you want to get off YouTube, take $3 million, we'll do that. An interesting thing coming back to the data point was that as part of the due diligence, we had PwC come and sort of do due diligence. We had McKinsey create this really elaborate, like 50-page, like Nollywood English document. It was great. I never read it during the due diligence. No, but the interesting thing is that it was really positive in my favor, and I was genuinely surprised that where did they get this data from? I was just like, wow. But great, it worked in my favor. So that's not a problem. Good people at McKinsey. But the key thing is that there is, for us at least, we had something. It wasn't presentations, because even our first pitch deck or business plan, we refused to do it. I say we. I refused to do it. And in the end, our investors just said, look, these guys seem interesting. They seem like they've figured something out in the market, and they gave us $3 million without a website. And obviously, since then, we've kind of did a very good job, obviously, of spending that capital and at least justifying the reasons to why we spent that capital. And from 3 million to 25 million where we've raised today, I'm fairly certain, in hindsight, we've probably wasted half of that money on just like things which didn't make sense. But at least we understand what makes sense and what doesn't make sense. And Nigeria is one of those peculiar markets where there is money, but there is no local money is actually incredibly sort of difficult to get from people. So my experience has been incredibly peculiar in a sense where I haven't actually had to go out there to raise money. But with that said, there is money there for the right opportunities. There are money there for the people who actually have something of substance. And Lagos is full of really smart, smooth, suave-talking guys with business plans in their pocket. If you want to give them money, they're happy to do that. So it's about how do you kind of filter out those who are just talking and those who actually have something of value. And I think what Tunde said was absolutely correct. It's not going to investors when you have a business plan. It's going to investors when you actually like have something of substance, and they've seen that you're willing to quit your high-paying job, that you're willing to put a couple of guys on a payroll and sort of, even if it's like a couple of $1,000s a month, it's to do that. And I think a lot of entrepreneurs that I meet today, they're essentially looking to de-risk everything. And as an investor and as an entrepreneur, I'm just like, well, it's a risk game. You're most likely going to fail. But if you don't want to burden yourself with any kind of risk, then you shouldn't be playing that game from my perspective. And I look at that from having made 11 angel investments in Nigerian tech companies. Most of those have failed. So I've definitely kind of lost my share of investments on that. But that is what it is. But as an operator as well, I think there has to be credibility in you making the personal sacrifices. I think, as Elo said, from 0 to 1, it's all about the entrepreneur. If you can't get from 0 to 1, then you basically shouldn't be in the business. I think if you were to accelerate yourself and go from go straight to 1, you'd actually end up being a pretty poor entrepreneur, from my experience.
Right.
Yes, please.
So I think Jason's points are very, very spot on. I would add 2 points. So right now we've raised 2 rounds for ACE, and 2 things have been consistent. So the very first thing is people back the entrepreneur before they back the business, right? So what I've found is that you do a model of some sort to explain to your investors how they can make some sort of return and why you're doing what you're doing. But most likely within the first 3 to 6 months, everything will change, right, once you actually launch. And so what people look at is this a team I'm willing to back? And in our case, myself and my partner had worked for 2 years in the market. He has done logistics in close to 20 different countries, all in emerging markets. We had grown a large business in Nigeria. And so people had confidence that, look, if these guys have conviction about what they are doing, most likely they're onto something. So that was the very first thing. So the team is key. And I think it's key for anybody looking to start a business. The easy thing to do is go grab a friend and say, look, let's launch this thing together. But most likely that's the wrong thing. What you want is someone that's complementary to what you're trying to do, right? In my case, my expertise is more on the commercial side, getting clients. His expertise is on logistics. He'll forget more things about logistics than I'll ever know, right? So the team is critically important. The second thing I would say is it's very important, even if you're not thinking about starting a business now and you're in your job, do good work at your job. Because In our family and friends round, maybe half the round came from friends. So folks that I had worked with as far back as 10 years ago. And you can imagine if that experience was not a strong experience, they're not backing you today. And also your investors who you're meeting and you impress them in your fancy PowerPoint presentation, they are going to go back and do diligence on you. And it's a very small community, typically in Africa. They will call your old boss. They will call your old friend and say, look, does it make sense to invest in Tunde or Brooks or Jason or Ilo? And if the answer is no, you won't hear from that guy again. So two things. The team composition is very, very important. And also in anything you do, don't lie and do good work, and it'll come back and pay off.
And let me jump in as the only non-Nigerian up here. And I will say that, like, having lived in Nigeria, it is true. Nigeria is unique, and there is a uniquely high amount of money in Nigeria. And I think, a lot of the guys up here have raised at least some money in Nigeria, and I'll tell you that I have really struggled to raise money on the continent. And I think that that's for a lot of reasons, and they're not all that I think there's two main reasons. First, there's just not a huge amount of liquidity in general. But then second, I think that there's just not also a culture of angel investing. I think that, Jason is one of the, few angel investors and kind of active angel investors on the continent. And so for me, I think that Tunde kind of alluded to something that's critical, is that, once you have your proof of concept and you've hopefully put some of your own capital in, even if it's $1,000, I think it's really helpful to find people who support you and who trust you and who will back you as a person. And that's not necessarily even people who you meet who are definitely backing you as a team. But I think that for me, we've had a lot of ups and downs. We've had some really bad, difficult times. But my investors kind of really believe in me as a person because, most of my core investors are either related to me or people who I've known, for a long time. And I think that that's also really important, is to have people, at least in the beginning, who really have your back, in addition to wanting to make, a great return. And I think whenever possible to do that, I think that that's really a good place to start. And then you can raise your big institutional rounds from Tiger and from other places down the road.
Thank you very much. Did you want to add?
Yeah,
please go ahead.
I wanted to. So there's another perspective. I think I and Jason have discussed this informally before. And it's another thing. I think it's a story about Nigeria and Africa in general. The different ecosystems need exit stories. Those exit stories will help fuel capital. Jason is able to do angel investing and has the generosity, if I can use that word, to lose 50% of his investment or 70% of the investment because he knows what it takes to go from 0 to 1. And, several rounds have gone in, but we need potentially, raising money is not the end of the game. Raising money is the beginning. Raising money is the hard work. Raising money is from 1 to 10. That is really difficult work. So at 10, you can make the decision to exit and have some money. You can take half of that money and continue and reinvest. It's the guys who have been in the play that understand the play. And that is the kind of capital that you don't expect. So where's the source of capital right now in Africa? It's commercial banks. Commercial banks don't invest in oil blocks. And starting a business is like going into an oil block. When you validated the business model, that's where you can get real investment. So, and the guys who are going to support you at the beginning are the guys who understand what you're doing. And I think it's the same story with America. When technology started to happen, the guys who accelerated that growth are the guys who were in it and had made some money from it and understand the entire ecosystem and how it worked. Those are the guys that would support you when it's very, very difficult. Like we alluded to, 0 to 1, most times, 60%, 70% of the time, you're going to lose all the money. I'm a limited partner in L5 Lab. And when we started it, we had 5 businesses, only 2 saw the light of day. So we lost. So it's essentially that 60-70%. But nobody talks about where we lost money. Everybody talks about Jobberman is a success. But something about it as well is, but you take all the money you get from Jobberman and you're able to invest in other things. So it's a case of having, and it all comes back together. It's cyclical. So the guys in this room who are studying and getting fantastic business degrees need to come home and help with this growth. Because when you're part of that system, that coming in, there's significant value you can add. You're part of a team. You build a business. That business gets an exit. The chances are that when the guys who you're going to earn some money, if Tunde gets an exit out of Ace, the chances are that he's going to back the guys in his team. That's how the PayPal Mafia started. So that cycle, we need to think about it from our perspective as well, if we're interested in growing Africa.
Thank you. Something very, very sobering here. We have 3 Nigerians on the panel, and they're insisting on going from 0 to 1. all of us who are not Nigerian, we always see Nigeria going to 100, starting at 100. So there's something very, very sobering for all of us to remember. The 0 to 1 principle. You started alluding to also a challenge that a lot of us mention when we're wanting to start in Africa is around building that dream team. And I hear challenges around that. Would love to hear from Brooks and Elo. Can you talk a little bit about that? How did you go about solving the talent challenge? Does it exist? Some people say it doesn't. It's something we're creating. So we'd love to hear what did you concretely do to solve that challenge, if it was one for you as you were starting out?
Okay, absolutely. I think till today, it's still a big challenge for us. Starting up, how do we deal with that? I got initial investment from friends, very close friends who I worked with at MTech. Tunde alluded to that by talking about doing great work, people believing in you. So our initial investment was the money I could get from my consulting engagement and the guys who I worked with, my colleagues. And that was how we got our initial money. The team that I put together initially were people who were part of my team where I used to work. And I recruited some of the star guys out of there. And so essentially at the beginning it was, if we put together a company profile, it was Elo, Ume, MTech, IFC, MTech. So 3 guys came together and we started this stuff. And of course, complementarity was absolutely important. Brilliant programmer. I'm more of a business guy, commercial guy, a deal maker. And I was able to find somebody who could do the operational stuff. And that's how we got going. In the middle of that, so when we validated the business, going from 1 to 10, which to me is not so difficult, actually. When you validate a business model, you have cash flow. Nigeria is a big market. You just have money coming in, right? It's now then, how do you build what you call the middle management? And that is where the MBAs come in. How do you foster the culture that got you to where you are? What things can you change? What kind of individuals can you bring into the team to deepen the competitiveness you have, but of course not changing the formula around the business? And that is the challenge where we are today. So essentially, it's important at the beginning as an individual to have people, like-minded people who you can navigate. You don't want to come out, Ken alluded to picking up somebody from the bar. I think in Nigeria, the chances of picking up somebody from the bar and starting a business with him, I don't think is good. In Nairobi, but in Lagos, you're going to pick up a criminal. It's yeah, absolutely. So it's a case of it's important that It's important that like-minded people who you can think with, people, when you get to the time you can pay the salaries, people who understand. When you get to the time where we need to share money, people who share the money in a way that, it's growing the business. And when you see that those things are not quite moving in the direction, when I started off, I had a partner who I had worked with before, but our philosophies were not quite the same. And how did I figure that out? We had already started. It was already 1 year in. And I had to make the hard decision. He's my friend, he's still my friend today, but I had to make the hard decision of, hey, dude, we can't do this stuff together. Our philosophies are not the same. And being able to make those hard decisions, it comes with choices. So, making those hard decisions and the talent, I think the talent question is a bit very difficult, and I don't like to talk about it so much because looking at Nigeria and the supply side, we have a technology office, a business in India. Why did we go out to India? We went out to India because of the supply side. In the last 2 years, the first 2 years of our setting up our technology hub in India was pretty much free-flowing until Narendra Modi became PM. India has seen fantastic growth in very, very short time. We can't meet up on salaries. They're poaching from us. So it now becomes like, and this thing happens so quickly. We can't even react. Why? Because we haven't raised money. A key driver for us aggressively trying to raise money now is because of fostering our innovation technology-wise and making sure that our India move wasn't a bad decision. But when you come to Africa, what are the chances? How do you get talent? From a programming technology standpoint, the supply side is non-existent. So I think I should attend the education panel. Thank
you. Brooks, can you share a little bit your experience?
Sure. I mean, I'll say this is a huge a huge issue. I think it can be very difficult. For me, I think that, Tunde really is like the prophet on this panel. Everybody keeps referring back to him. So, but what Tunde said, I think is really true. I think so. First of all, going into it, you have to know it's going to be hard to find people, and so that means you have to prioritize the people that you are trying to find, right? And I think that finding you can call it complementary, you can call it, kind of very specific technical skills, whatever it is, you have to prioritize. And so for us, I've been looking for two things. I have no idea how to run a glass plant, right? And that is technology that we had to find, and the skill set that we had to find, and one that unfortunately, I knew we weren't going to be able to find on the continent. And so we prioritized that. We spent a lot of time on it, a lot of money on finding the right expat to bring in and really run operations. But I think that prioritization of knowing that that's what we needed first was critical. I think that second, once you've got that prioritization, I think that then you can start to look within your friends and within people that you know and within your broader circle, because I think that trust, especially in key roles, is absolutely critical. And so in Roha itself, a good friend of mine he's been involved throughout, and now he's just joined us full time. And this is someone who has very complementary skills. I kind of looked around and said, what do we need? And he has a lot of the hard skills that I don't have. But we've kind of kept in touch, and he's kind of stayed involved a little bit over time. And now he's coming on. And I think that that's because having someone who has those skills, but who I can trust was a really big priority too. And I think that takes me to my third thing, is that at the end of the day, you will meet tons of people along the way. And I'm sure I will meet tons of people today who are interesting and who might not have exactly what I need today, or who might not be ready to come and do something crazy like join and work with me today. And I think that keeping in touch with those people and keeping a running list, either literally or just kind of in the back of your mind of, oh, this is a cool person who I met at a conference who's doing interesting things, like I should reach out to them and just keep in touch with them. I think it's really critical, because finding people is very, very difficult. And so when you find good people who you can trust, who have those complementary skills, I think it's important to keep them in your network. And even if you can't afford to, or you don't want to hire them today, to kind of just keep those conversations going so that you have a running list of people that you can go to when you say, oh, I need X, Y, or Z skill set.
Great, thank you. I have hundreds and hundreds of questions, but we want to make sure we leave enough time for the audience. So why don't we dedicate the next, 20 to 25 minutes to questions. Oh, I will start. We'll take 3 questions at a time. So I'll come to this side of the room, the lady, and then the gentleman, and then in the brown jacket.
My name is Rashida. I'm coming from Ghana. I am a testimony to the discussion this morning. I started on my dining table. Nobody could actually believe that Isaac Group, which was so much projected to the public, was actually operating from the dining table of my home, actually. Now, I'd want to believe that the very language of entrepreneurship actually has been carried across with so much expectations. Investments, investors, data. I'd want to believe, for starters, maybe the right description for this session should have been starting up big. Maybe we might want to tone the language to the fact that even selling roasted plantain by the street could mean entrepreneurship. Making the language as simplified as possible to the belief of young people who might just be wanting to get into entrepreneurship. Now, not to say we would want an overly simplified language. Maybe in the case of Jason, he was just one of the lucky ones, or the case of Elo as well. In the case of Jason, I do understand there was even no business plan in place. But getting it all planned, I would want to believe, would usually work out for so many people. Simplifying has led to the collapse of so many businesses in Ghana, for instance, today. There's a particular street in Ghana you walk into, and there are about 30 people selling roasted plantain just at the same time. This could just be as a result of lack of analysis before getting started on businesses as well. Thank you very much.
Thank you, Rashida, for your contribution. We'll take questions. We'll go to the gentleman.
So my name is Jolomi. I'm from Nigeria also. The question I have is, what did you do in your most difficult time? You talked about success. How did you handle the time when your business was near there? Or, you come across those times. What kept you going? What was the drive that kept you sustaining that success and keeping the business going when you could have died?
Great, thank you. Actually, if you don't mind, we'll answer that question, and I would love everybody to answer it. If we can be a bit brief, and then we'll come to your question. Shall we start with you, Tunde?
No, it's a great question. I mean, one of the big things we look for when we recruit is people that are resilient, because you will hear no a lot if you're launching a business, particularly in our market where things change very, very quickly. And so two things, or one main thing comes to mind. So when we first launched our business, it was very, very critical for us, we thought at the time, to sign one of the big e-commerce players in the country. To handle at least a decent amount of their delivery, right? So in Nigeria, it's Jumia or Konga. And, I had just left Jumia, so it's a bit of a sensitive thing to go back and try and get that business. And with Konga, we're trying our best to win that, contract. And we couldn't get it. And we had we're raising money at the time. We had convinced our investors that, look, this is a no-brainer. Every single business we talk to about this will sign us up overnight. But that contract didn't come for at least 6 months. And it was while I was trying to raise capital. And essentially our volume was literally around 10 packages a day for the first 2 or 3 months, right? When you're projecting to have 100 or 250 a day after month 1. So for us, two things really helped. I think to Brooke's point, you need really fantastic investors that believe in you and understand that this is going to be a long-term journey. And then the second thing is you have to find another way to survive. And so literally what we did was we introduced new products that we didn't even think we would introduce in year 1, right? So the idea was to be delivering items directly to consumers in their homes or offices. When that wasn't coming, we went around to another client and said, look, why don't we handle your delivery within your retail network, right? So it wasn't exactly packages going to individuals, but it was packages coming to their warehouse, which ended up being quite profitable for us, right? The second thing we did was we introduced a product where because one of our main investors was a call center business, a customer service business, we also offered call center businesses to 2 quite large clients. One large fashion house from SA that was coming to Nigeria, and also one of the largest fast food businesses in the country as well. And how we pitched it was, look, it is a way for us to essentially handle most of your order fulfillment, right from when someone orders online, right all the way through to delivery, right? And I think for us, what you learn very, very quickly in entrepreneurship is you don't have time to cry about things that are going wrong, right? Because at the end of the day, you have payroll to make. And your employees don't care if your initial contract didn't come through because they have families to feed, etc. So as long as you have conviction that your team is on the right path and your vision is the right vision, how you get there will change. And you just have to figure out a way to make it happen.
I'll say as a woman that sometimes you do cry and you do this and then you keep going the next day. So, anyone else really wanted to make sure your question is answered is individually, personally, when it gets that hard and you can't cry, what do you do?
Yeah, I think hard times call for hard decisions, hard choices, and that is the reality. For us, the reality check came for me when we got our first few very good deals. And that was under 1 year of the business. And why were we getting that kind of traction? We're getting that kind of traction because in my former job, everybody saw me as somebody that, they could trust. And there was business coming through. But somehow, in Lagos, we were the king of disco. So we made money and we were out the next night, partying the way. So you need to make hard choices. And that's where humility comes in. Humility is truth, and it helps you with self-awareness. If you do not apply that humility, you sit back and think about it. And, businesses are people. If you don't fit the business, it doesn't get to where it is. So if you make margins of 40%, 20% goes into disco, 20% goes back into the business, then you have to, you have to make the hard choices. So I thought to myself, I'm going to take these decisions. I'm going to cut back. And Lagos is a highly perception-driven society, where if people don't see you, they'll be like, he's not on, man. This guy is not on. But I tell you what, man, 2 years down the line, 3 years down the line, you're going to come back stronger. And it worked, for me, it was very clear. And that's why I thought to my co-founder at the time that, dude, we can't do this together. If you're not going to make these choices, then we can't do it together. So let's cut our losses now and move on.